This is Scott Bauer on the floor of the CME Group, and another day, another record. Market was pretty steady all day, but we really did get some late day buying in the S&P complex today. All new highs there. Dow was up. This is the sixth day in a row. New highs for the S&P here, sixth consecutive day. And it was really the airlines and the banks leading the overall market today, especially those airlines. Man, oh man, out of nowhere. Not only huge volume in their individual stocks, the likes of American, Delta, JetBlue, Southwest, but also options. Huge amount of options trading there. On the economic front, ISM manufacturing numbers, highest we've seen since May of 2004, sparking a lot of optimism there. There's also some optimism, obviously, for the potential tax overhaul, and lower yields really just are fueling this market. So who knows what's in store moving ahead here, but this slow grind higher doesn't seem like it's going to stop anytime soon. On top of that, what is also very positive, very bullish for this marketplace is the breadth of the market. Gainers to losers here, 1.8, almost 2 to 1. So very positive. Looking at the S&P option and futures complex here, almost 10 million contracts of open interest. Very high. Very high. It stays that way after that big September expiration that we saw here. Put call ratio trading in the S&P E-minis. Last week we saw that dip down to 60% put trading. Typically it's about 75%, or as we say, 3 to 1. So very low put call ratio last week, meaning lots of call buying. Well, it has risen somewhat, but still, even as of yesterday, only up to about 69%. So there's still a persistence of big call buyers out there. In fact, yesterday, we saw call buying in December going up to the 2550, 2600 strikes were the most heavily traded call buying buyers out there. On the put side, we saw March 2200 and then Dece 2300 and 2250 puts also active yesterday. Now, with volatility still so incredibly low across the spectrum here, the S&P market here is only predicting a move, only baking in a move of about $9 between now and the end of the week. That's just unbelievably low. Even going out just over 2 weeks to the Friday, October 20th expiration, because volatility is so low, the S&P market only predicting a move of about $25 or so. So overall, this market just continues to grind higher. S&P's making new highs here, it seems like every day. Scott Bauer on the floor of the CME.